Thank you so much, and it's great to be here. The inquiry has benefited so much from the cooperation with Switzerland, and I'd like to thank you again, Bruno. We had a fantastic advisory council yesterday in Zurich, and I'm glad that we still have many of the members still here. I am one of the other engines of the inquiry. We have many engines. You heard Simon earlier. One of us is electric, the other one is hydrogen. I'll let you know which one's which. You can work that one out. This is very, very good timing for us. We were set up in January last year, and our final report will be delivered in October. So we won't be giving you the precise findings, but really some of the emerging lessons that we'll be bringing forward in the next 5 years. I come to this from a financial institution background at HSBC, and my colleague Ninal Kidwai is here as well. The one thing I learned after 7 years with HSBC, that it does not stand for Hong Kong and Shanghai Banking Corporation. It stands for how simple became complex. And my job today is try to make the complex simple, but hopefully not simplistic. So what is this sustainable financial system? We've been talking to many people around the world, and these are some of our, I suppose, emerging thoughts about this issue. This issue of purpose, one of those 3 Ps we heard about this morning. It serves the long-term needs of a sustainable economy that is dynamic, inclusive, and as Bruno said, operates within planetary boundaries. It's very necessary that we're not going to achieve our sustainable development goals, whether in terms of the social dimension, the economic dimension, or the environmental, without a sustainable financial system. That this is not a peripheral issue. This is not an incremental issue. This is core, and this is core to the delivery of the functions that we're looking for from a financial system to be efficient, to be effective, and to be resilient. And it's very practical. This is not science fiction, but financial fact. And there's a lot of innovation here in Europe and also around the world. So that is how we're starting to look at this question of a sustainable financial system. We're doing this in partnership. We're doing this in partnership in a knowledge network around the world, and it is extraordinarily dynamic for us, and we learn a lot through our partners, whether here in Europe, in Latin America, North America, or indeed in Asia. And we have partnerships with more than 40 different organizations. And this is, we hope, will be one of the things that can be carried forward, this network of knowledge partners, whether they're central bank governors, banking institutions, NGOs, or academics. Our core task is to really think about how we can more effectively, more efficiently mobilize finance, mobilize capital for the goals of long-term sustainable development. As we've been looking at this, I think we've been seeing that there are these 3 interconnecting factors that are important to look at in a complementary fashion. Clearly, there is the issue of the real economy signals, the pricing element that we heard about so much this morning, that we have market failures, and often we have weak regulation. Then in the bottom left, we know that actually public finance is essential, whether domestically or internationally, to pay for those public goods, to deliver the infrastructure and public services that are so essential. But we also know we need action in the financial system itself to mobilize the capital. And there is this emerging interest, and I think the inquiry was set up really to try and see what comes out of analyzing and documenting this emerging interest, and to take something beyond the current fragmented practice. Simon touched on this this morning, and I think it is very important for our context. The financial system is incredibly dynamic. It is not static. And as we're looking to think about how to advance a more sustainable financial system, we're very much bearing in mind these, among other, driving factors. The growing influence of emerging markets, as we've seen, many of you will have listened to the work of Dr. Rahman here. The impact of the post-financial crisis policies and regulations, the regulatory tsunami that we've seen, and also the reflection that has had, I think, in many countries on the role of the financial system to serve the real economy. And finally, this area of financial sector technology and business innovation. This is moving very, very quickly, whether it's peer-to-peer lending or mobile banking in Kenya. So for us, the question is, how do we think about advancing a sustainable financial system in this context? That we're not trying to, in a sense, green yesterday's financial system, but think about a dynamic system looking into the future. With our partners, we've been looking at actually what is going on. We've tried to avoid looking at the international level, going to ground, and looking at what is happening in different countries and different contexts. And these are just a few of the examples. I deliberately left out Switzerland because I'm looking forward to hearing what we're going to hear from the Swiss team. But just some of the examples here. What I'd like to emphasize is there are very, very diverse drivers for this innovation. But I think there are some sort of common themes that are coming through. So in Bangladesh, a green finance strategy growing out of the focus on financial inclusion as a core part of financial development, new requirements for banks to allocate 5% of lending to green finance, and some very interesting refinancing tools to actually utilize the central bank's position for allocating low-cost capital. In Brazil, a very interesting dynamic between market innovation from the stock market at Bovespa through the banking sector, and now the central bank to introduce resolutions on a diversity of sustainability themes, and yet last year introducing requirements that all banks need to have environmental social risk systems as part of their core risk management. Again, a very interesting dynamic between a regulatory intervention, but building on market innovation. In China, we've heard quite a lot about that already today. Two initiatives we've been working in, one with the International Institute for Sustainable Development and the State Council in China, and the other with the People's Bank of China, the central bank. And here you're seeing this momentum building from some initial work in the banking sector, green credit guidelines, to a more comprehensive approach, and an approach which will lead green finance to be one of the themes in the next five-year plan, the 13th five-year plan, which is being designed this year. In Indonesia, interesting experimentation in terms of an index, in terms of information delivery, in terms of capabilities. But what I think has really impressed us is this forward-looking view, recognition that actually building a sustainable financial system is a strategic exercise to happen over a number of years. And as far as we know, perhaps the most developed roadmap for a sustainable financial system, looking ahead 10 years, taking this strategic view. This is not going to be established overnight. Kenya, many of us will be impressed with its mobile banking revolution, driving inclusion, but also now being extended to clean energy and distribution of solar. And finally, my own country, the UK, a lot of work on the fiduciary duty, clarifying fiduciary duties around sustainability for investors, but also some work now by the regulator, the Prudential Regulatory Authority at the Bank of England, looking at how does climate change impact both on financial stability, but also on the safety and soundness of insurance companies, both from the effect of physical impacts potentially, but also in terms of transition risks and risks around stranded assets. And what is interesting there is looking at how the Bank of England is looking at this as a business model issue, not just an asset quality issue. At the bottom there, a quote from Aloysio Tupinamba from the Central Bank of Brazil, which for us I think captures the sort of common theme of some of these experiments. That for him, sustainability is a positive asset for financial and monetary stability. That they're seeing financial monetary stability, financial stability being delivered through sustainability. Sustainability not being an add-on, an extra factor. So where can we make a big difference? I know in the work in the Swiss team, been focusing on different sectors. Many of these will be obvious to us, but just wanted to go through these sort of 5 areas of high potential areas. Clearly banking, the largest area of assets in the world. And I think what we're seeing is this innovation at the country level, developing countries, emerging economies, pointing to the potential for a new era of cooperation, potentially at the international level, potentially in terms of the Basel rules. And there's some interesting discussions now going on about how do environmental factors, how can environmental factors, sustainability factors be linked to the Basel rules, which obviously are come together here in Switzerland. In terms of bonds, I mean, two things we're seeing very, very clearly: the fast-moving green bond market, and obviously the inclusion of sustainability factors into credit ratings. Both very dynamic, both moving very quickly. And with the World Bank, with the OECD, with the Climate Bonds Initiative, working to design a set of sort of policy actions which policymakers can take to support the green bond market, ensuring its integrity and its scaling. With institutional investors, probably amongst the institutions, the stakeholders which have been taking most action to date, and some interesting discussions around capital allocation, around investor governance and market incentives. On insurance, strong pillar here in Switzerland, clearly a pivotal role in improving shock-absorbing capacity. And I think some interesting dynamics which we'll be picking up in Rushlikon next week with Swiss Re about the linkage between natural disasters and climate change and how to mobilize insurance balance sheets for long-term investment. And finally, central banks themselves. These have significant assets, and I think as Dr. Rahman has shown and other central banks are showing, have a potential in a prudent way to deploy their techniques and their tools, whether it's in terms of collateral or asset purchase, in ways that are aligned to sustainability. And crossing across all of those is, of course, the issue of time horizons. And as some of you might have seen, Mark Carney, the Governor of Bank of England, has been very focused on what he's calling the tragedy of horizon. The time horizons, both of regulators and also often market participants, can be quite short-term and out of line with the realization of many of these issues, such as climate change. As I said, one of the things that is coming through our work, talking to different partners in different countries, is how a sustainable financial system, sustainability, is a core aspect. And we've been looking at this in terms of three ways: how sustainability financing needs are met, how the sustainable financial system is effective in terms of delivering the capital deployment for a green economy, how it is efficient in terms of the cost of intermediation, and how it can enhance resilience. And these three are becoming part of what we would call a performance framework for the financial system. Interestingly, this is now being picked up in the international policy circles. As you may have seen, G20 finance ministers and central bank governors asked the Financial Stability Board to examine how climate change issues should be examined from a Financial Stability Board. And a quote there at the bottom from our partners in China, the Development Research Council, the State Council, and ISD. Again, this point that greening a country's financial system is not an additional performance requirement, but concerns the efficiency and effectiveness of the whole system. And this is how we need to think about pathways. Simon talked about pathways, the how, the strategic maps. I think in our view, these elements of efficiency, effectiveness, resilience are part of the purpose of the financial system. We're talking about these large, high potential areas, the asset pools of banking and so on. Many tools are starting to be suggested as ways of aligning, whether that's risk assessments and stress tests, skills and capabilities, transparency, and so on. And then think through in different ways at the national level or in terms of the international level, what are the catalysts and the pathways for change. Sometimes crisis can actually be a catalyst for change. Technology disruption, national leadership, and so on. And this is particularly what we're aiming to focus on. What are these practical pathways? Finally, I'd like to end with some thoughts on the international cooperation agenda. This is a big year for international cooperation on sustainable development. We have the Financing for Development Summit in Addis in July, the launch of the Sustainable Development Goals in September, and of course, the Climate Conference in Paris. Our report, as I suggested, will be launched in October. And we see some of these areas, these opportunities for convergence around risk and prudence, around capital mobilization, around transparency, and around culture and capabilities. We see this as a huge time of opportunity. And again, I'd like to thank Switzerland for supporting the inquiry, but also for leading the Swiss team. And I'm delighted to look forward to the next presentation to hear from the Swiss team. Thank you. Perfect.